Hi everyone. Welcome to another edition of Market Breakdowns. I know this is one of the first breakdowns I have dropped in about 2 months. I'm really sorry that I couldn't keep up with the tempo I had promised everyone. I know I made a vow to be consistent on my trading channel on YouTube. Um, but I lost my auntie. She was a very great person. I was very close with her. Now this affected my psychology, and like I always tell people who are involved in this industry, if your psychology is messed up, then really there is no reason for you to be on the market trading. Personally, I tried to trade, um, but my results weren't the best. It wasn't reflective of the level of performance that I am normally at. So I just decided to stick with my mentees, and I really want to take this opportunity to apologize to everyone who was depending on my breakdowns on a weekly basis for more insights to the market. The ceremony went well, everything went well, and I'm back to normal. And I'm looking to continue dropping these analysis every single weekend. So straight to the point, before I continue or before I actually get into the analysis, my strategy or the way I trade is really a dollar-based strategy, right? It is dollar-based. It is dollar-based. So whatever is happening to the dollar, if you are able to understand that, then literally you put yourself in a position to be able to determine what's going to happen in the eventually to other currency pairs. Now, I like looking at the DXY, which is an index that literally measures the strength of the United States dollar against its counterparts, right? So if we're looking at DXY, it's been in a downtrend. You can see that clearly from here. Last week it retraced, I think that was Friday. It retraced a little bit, and once it retraced, it got to this point right here around 1980-70, and we had this little structure that was created here, and it broke down again. I think that was after the release of the CPI data from the US on Friday, and it's literally been weak. It's generally been weak, and because it's been pushing down, most of the US pairs that I look at, USDCAD, things like USD SWIZY, I only trade USDCAD and USD SWIZY. I really don't trade USDJPY. Have been weak as well. So right straight to the matter, if we're looking at USDCAD for this week, from last week, it created some sort of a structure over here around 122.046. That is the area I'm looking at, and it's been weak. It's been weak. It's been dropping. So for this week, I'll keep an eye on this area between 122.046 and 120.462. The U.S. economy is still in inflation, right? It's in an inflationary it's on an inflationary run, and it's not looking to strengthen anytime soon. I mean, the central banks, the Fed, is using as many instruments as it can to try and correct this inflationary run they're having, but it simply isn't working. So for now, this week we're going to watch this area. If there's a break and retest of this area, obviously this market is weak, is in a downtrend. You should only be looking for shorts. I will not be looking for a long this market unless this market breaks above this zone and actually beats this previous high over here, and I see strong confirmation that it wants to rise up before I may decide to go for a long. But so far so good. This market is looking to go short and hit the next support zone around 1.19500. How did I get that? Weekly time frame there for you guys. Weekly time frame, you can see clearly over here. There's an O region over here. Previously, USDCAD was there. This is the region. I'm going to extend it right to the end. So you can see this region over here. Show you guys that real quick. USDCAD has been around this region around 119,500. That was sometime in 2015, and now we're getting to 2015 levels again. So if it breaks that box, obviously 2-hour time frame there, breaks retest. If it does a retest, I will be taking that short to that level, and that should give you about, it's not much, that should be about 93 points in profit if we're looking to trade that level. USD Swiss, same thing, moves like USDCAD. It's been weak, dollar based. The dollar is weak. I actually started shorting this last week, but this is my setup right here. It's not really in profit, a little bit of profit, but again, it's at that point where we have moving average crossing over, break of the box retest. I will be looking to short this market. I am shorting it actually already. I haven't set a take profit point normally, but if I have to do that, I have marked up previous support levels. It should go down to the next support level at 87,900, right? It should only get to this level if the Fed doesn't step in to correct this inflationary run being experienced by the dollar. Now, I trade Euro USD a lot. You can clearly see it's doing the exact opposite of what the dollar is doing. It's been strong. It's been going strong since the 21st of March, and it hasn't looked to slow down. I identified this little zone over here last Friday. There was a little zone over here, and you can clearly see, clear as day, that this zone has been broken, right? Moving average crossover zone has been broken. This market is not looking to retest or slow down. So obviously, I've been looking for longs to the next obvious resistance level. That's around 122,300. So if you're looking to trade this market, you can actually look for clear longs and just go up with the market. I mean, the market is momentum. Dollar is weak, so euro is strong. EURUSD, another pair that I trade a lot. It fulfilled the conditions for me to trade. Broke the box, retested, broke the box around here on the 21st, 8 p.m. Broke the box there, came back, retested, moving average crossover there. It's heading to the next resistance level. I will be looking to take this long as well. Show you guys the level real quick. Not 1 month. 1 week over there. I'll show you guys the level. Naturally, it's already beating 132,785. So it's looking to get to 136,100. So if you're looking to buy this market, you should be looking to buy and hold a long to 136,100, or not just really like hold a swing trade. You can get in and get out once you make enough money for yourself. Understand, the market will never move in a single direction, right? The market will never move in a single direction. 2-hour time frame, but excuse me. Each time the market makes a move, like from here to here, it consolidates, right? Each time the market is consolidating, it is giving itself breathing room and deciding whether it wants to go up or down. So if you're buying or selling these markets, always know you have to cash out if you feel comfortable and if you feel like the market is slowing down. Obviously, I teach in my course, I tell you how to identify when the market is going to slow down. I give you exact patterns and strategies that can make you identify when the market is about to slow down, so you can actually cash out. Another counterpart to the pound, weekly chart has been going up. This is the 2-hour chart actually. Weekly has been very, very strong, but you can see even on the 2 hours, it's been going up. Strong bullish momentum going on there. The bulls in control. 2-hour time frame over there. Real quick, reset the chart. This market was in this zone last week. This zone right here. I'll show you guys the zone. Created a little bit of structure over there, but structure has been broken, and this market is looking to continue its upward drive. If I bring in my Fibonacci tool, I'll show you guys real quick. Swung from here right up to this point. Then retraced 50%. You can see that retracement level right there. Created strong